Tired of the stress that comes with trying to get rich quick? What if you could build real wealth in Singapore without watching the markets every day? In this video, I'll show you a calmer, proven path. But first, if you would like to help other Singaporeans escape the financial noise, please hit that like button and subscribe to Wealth for You. If you're feeling overwhelmed by crashing cryptos, volatile meme stocks, and the pressure to get rich yesterday, you are exactly where you need to be. This is a different kind of money conversation. This is about finding a calmer, steadier path to wealth, one that feels sustainable and, dare I say it, even happy. Welcome to your guide on dividend investing in Singapore, the Get Rich Slow and Happy Way. Just a quick note, this video is for educational purposes only and is not financial advice. Please consult a licensed financial advisor before making any investment decisions. Chapter 1. What investing really is. Let's cut through the complexity. Forget the complicated charts for a moment. At its heart, true investing is beautifully simple. It's about becoming a part owner of a real, thriving business. Let me show you what I mean. Imagine that famous local bakery you love, the one with the queue out the door. Now imagine that instead of just buying a pastry, you buy a small share of the bakery itself. As that bakery becomes more popular, opens new branches, and becomes a neighborhood institution, the value of your share grows. That's growth. But here's the best part. As a part owner, when the bakery makes a profit, you get a portion of those earnings. It's a direct reward for your belief in the business. That reward, your share of the success, is a dividend. So you see, this isn't a speculative bet or a gamble. It's about strategically owning a piece of proven, profitable companies and sharing directly in their long-term success. Chapter 2. The Singaporean Investor's Sweet Spot. So, why does this get rich? Slow approach feel like it was almost made for us here in Singapore? Let me show you with a few simple examples. First, the joy of mailbox money. Imagine you own shares in a company like DBS or Singtel. Every few months, like clockwork, a dividend payment arrives in your account. It doesn't matter if the stock market had a bad day or if news headlines are scary. That payment is yours. It's like receiving a steady rental income from a property, but without the hassle of tenants or maintenance. This isn't just numbers on a screen, it's tangible, quiet progress that builds financial confidence. Next, compounding, the world's most polite secret. This is where the real magic happens. Let's say you own a REIT that pays you a $100 dividend. Instead of taking the cash, you automatically reinvest it to buy more units of that same REIT. Now, you own a slightly bigger slice. Next quarter, the dividend is calculated on your larger holding, so you might get $102. You reinvest that $102 and the cycle continues. It's a self-reinforcing cycle where your money starts earning its own money. Over 10 or 20 years, this isn't just a straight line. It's a snowball rolling downhill, getting exponentially bigger. It's patience, rewarded. And finally, a generous tax advantage. This is our home field advantage. In many countries, you'd have to share a portion of your dividend income with the government. But here in Singapore, if you receive dividends from a Singapore company, you keep 100 cents of every dollar. That $100 dividend from our example is a full $100 in your pocket. There's no dividend tax, which means more of your money stays working for you, making your journey to income that much smoother and more efficient. Put simply, this combination of reliable income, powerful compounding, and tax efficiency creates a perfect environment for building wealth steadily and surely right here at home. Chapter 3. Your most powerful investment. Now, I want to share the single most important ingredient for making this strategy work. It's not a specific stock tip or a secret app. It's actually a shift in mindset. It's about embracing the superpower of delayed gratification. Let's be clear. This is not about saying no to enjoying your life. It's about saying yes to something much bigger. Think of it as a simple trade. It's the choice between option A, the short-lived buzz of a fancy dinner, or the latest gadget that, honestly, loses its appeal in about a month, or option B, the profound peace of mind that comes from knowing you're building a future of freedom. Let's make it real for a moment. That $200 you might spend on a single nice meal out? If you instead invest it in a solid dividend stock, you're not just setting aside $200. You are planting a seed. That seed starts to grow and it pays you a small dividend. You reinvest that, and it grows a little more. In 10 years, that one meal could have transformed into a tree that pays for dozens of meals in the future. You are not depriving yourself today. You are actively funding your future self. The person who wants to start a family without money stress, change careers without panic, or retire with dignity and security. Every time you make this choice, you are not missing out. You are making a deeply empowering trade, a temporary want for a lasting foundation. You are buying your future self the most precious gifts of all time: freedom and peace of mind. And that is a trade that leads to a truly rich and happy life. Chapter 4. 3 Pillars of Prudence. This thoughtful mindset naturally leads to 3 simple golden rules for your investment journey. Let's break them down with some real-world examples you might know. Pillar 1. Embrace the marathon. Wealth is not created in a sprint. It's built in a marathon. This means we ignore the daily noise and focus on the long-term horizon. Consistency trumps frenzy every single time. What this looks like: instead of frantically buying and selling, you set up a regular savings plan to invest a fixed amount every month into a fund like the Lion Phillip S REIT ETF. This ETF owns a piece of many Singapore REITs. You're not betting on one month's performance. You're steadily building a position over years, through all market conditions. Pillar 2. Seek reliability over flash. A sky-high dividend yield can often be a warning sign, not an opportunity. Our goal is sustainable, reliable income. We look for dividend champions, companies with a long, unbroken history of paying and even increasing their dividends. This is the hallmark of a resilient business. What this looks like: look at a blue-chip REIT like Capitaland Integrated Commercial Trust, or Ascendas REIT. These are not the highest-yielding stocks you'll find. However, they own high-quality properties in great locations and have a proven track record of managing their finances well to support their payouts through economic cycles. You're choosing a steady, reliable partner over a risky, high-paying one that might not last. Pillar 3. Build a garden, not a monocrop. A beautiful, resilient garden has many types of plants. If one fails, the others thrive. In the same way, your portfolio should be spread across different sectors. What this looks like: don't just invest all your money in REITs. A strong portfolio might include REITs for property income, like Ascendas REIT for business parks, bank stocks like DBS which benefit from a growing economy, and ETFs that give you instant diversification. A fantastic way to achieve this instantly is with a dividend ETF like the STI ETF, which holds the top 30 companies in Singapore, giving you broad exposure. It's like buying a pre-made basket of quality companies in one simple purchase. Chapter 5. Your first steps on the path. Beginning this journey is wonderfully straightforward. Let's turn that simple map into a clear, step-by-step guide you can start today. Step 1. Your gateway. Open a brokerage account. This is your passport to the stock market. Opening an account is like signing up for a social media account. It's done entirely online in mere minutes. You'll just need your NRIC and your phone. Step 2. Start small. Think big. Fund your account. You do not need thousands of dollars to begin. The most powerful step is the first one. You can start with $100 or $200. The goal is to build the habit. Transferring money from your bank account to your new brokerage account is as easy as a pay now transaction and usually takes a day or two to process. Step 3. Make your first choice. Place your first trade. This is where it gets exciting. With your funded account, you're ready to make your first investment. The simple ETF route, a fantastic one-decision start, is to buy a single share of a broad dividend ETF like the STI ETF, ticker ES3. This one purchase instantly makes you a part owner of Singapore's top 30 companies like DBS, Singtel, and Jardine Matheson. It's diversification in a single click. Step 4. Automate your success. Set it and forget it. This is the final crucial step to becoming a lazy investor. Reinvest dividends. In your brokerage account, look for the option to enroll in a dividend reinvestment plan, or DRIP. This ensures every dividend payout you receive is automatically used to buy more fractional shares of the same stock or ETF, supercharging your compounding without any effort from you. Set up regular savings for future contributions. You can often set up a regular savings plan that automatically buys a fixed dollar amount of your chosen ETF or stock each month directly from your bank account. Once this system is in place, you can truly step back. The system works for you while you focus on your career, your family, and your life. You're now officially on the path. Final thoughts. Your journey to a richer, happier life begins now. So let's take one last look at the path we've walked together. True wealth isn't just a number in an app. It's the financial serenity to sleep well at night. It's building a life where your money is a quiet, supportive partner, giving you the freedom to focus on what truly matters, your family, your passions, and enjoying the simple joys here in our wonderful Singapore. Remember the core of our get rich slow philosophy. It starts with a mindset of patience and delayed gratification. It's powered by the magic of compounding and reliable dividends, and it's executed through a simple, diversified plan. You can start today. Now, as with any journey, it's important to be aware of potential bumps along the road. While dividend investing is generally more stable, remember, dividends are never guaranteed. Companies can reduce or cut them during tough economic times. High yields can sometimes be traps. If a dividend looks too good to be true, it might signal a company in trouble. Your investment value can still fluctuate. Even the most reliable stocks can see price drops in market downturns. This is exactly why we emphasize diversification and investing for the long term, to weather these inevitable storms. You already have everything you need to start this journey. Be patient with yourself, be consistent in your actions, and above all, be kind to your future self. The most powerful time to plant a tree was 20 years ago. The second best time is today. If this guide has given you a clearer, calmer path forward, I have a small request. Please give this video a thumbs up. This helps the YouTube algorithm show it to more Singaporeans who are searching for a less stressful way to build their wealth. Subscribe to Wealth for You and hit the notification bell so you don't miss our next videos, where we'll continue to break down smart investing in simple terms. I'd love to hear from you. Let me know in the comments. What's the one financial goal you're most excited to start working towards? Is it a future holiday, peace of mind for your family, or something else? Thank you so much for watching. Let's continue walking this path to a wealthier and happier future together.